Let's quickly go over the retail sales picture, because the retail sales, even though it's released a couple of days ago, there's one thing that's overlooked, which is the control group sales. It's excluding auto, excluding gasoline, food services, and building materials. They jumped 0.7 in September, which is represented over here. The control group sales in yellow up 0.7% in September from previous years, previous month. So it's exceeding the forecast of 0.3%, marking the strongest rise in the past 3 months. This surge indicates resilient consumer spending. Here it's another picture of control group sales, this one is shown in the gray line. It shows the 3 months seasonally adjusted annual rate. Okay, it's actually around 6% over here. It's a clear upward trend since February of 2024. So why is control group so important? Why does this matter? Because control group feeds directly into the calculation of the US GDP. It provides a clear signal of the core demand by removing volatile categories. Okay, and this picture shows you the Q3 US GDP estimate from the GDP Fed Now from Atlanta Fed. It's a mathematical model estimate of the US GDP. As we can see, the Q3 GDP is projected to be 3.4%. It's actually very, very strong. Very strong. If the long-term neutral growth rate is 2%, right? This is 3.4 projection. It's very strong. And another thing we can see very interesting here is the implication for the Federal Reserve. This chart shows you the Fed funds derived future rate cut probability. The market is projecting almost 100% chance of a 0.25% rate cut in November meeting and 75% chance of another 0.25 small size rate cut in the December meeting. So that strong consumer data definitely feeds into this picture where the market believes that there's no more need for a 0.5% rate cut. And another thing very important to be noted is the future neutral rate. Sorry, not neutral rate, but terminal rate. Is like where is the Federal Reserve going to end in this rate cut cycle? So right now, the market is projecting the neutral rate is going to happen next year, September, and it's at 3.25 to 3.5%. That's where the rate is going to cut. That's going to stay. That's where the rate cut cycle finishes. And what's very interesting is that it's actually higher than the September economic projection, where it showed the Federal Reserve members' projection for the terminal rate, where they actually projected the terminal rate to be a tiny bit below the 3%, so around 3%. But here, this is around 3.3%. Okay, so maybe that's another implication we need to be careful, which is not only in the future we're going to go small steps, but also maybe our terminal rate is going to be about 3.5% instead of how it was pre-pandemic, like 2.5%. Okay, thank you.